Good evening, everybody. Did the afternoon comments not come out? Should have been. All right. Guess everybody's going to be in. They didn't. Okay. Abraham, what are you doing? Okay. How's that? All right. Okay. So the afternoon comments didn't get out. That's just a fine howdy do. Okay. Again, the visual characteristics of candlestick signals makes it where we can observe the obvious. The obvious is, looks like they found a place where there's equilibrium in the oversold area. Usually the first day of trading in September, when everybody's come back from vacation, is a good indication of what investor sentiment is. Almost like the first day after the New Year's, when everybody's come back. So when they started out of the chute positive today, ended slightly positive, but did an inverted hammer. But this is what I was trying to convey in the afternoon, or in the newsletter today. See if I can do this. As you can pretty much see, there's kind of a support level right in here. And that seems to be where they're supporting again. So if they do an inverted hammer, or did an inverted hammer, makes it very simple. If we see a positive open tomorrow, that tells you the bulls are right back there again. If they start taking this up where they close above the T line, I would suspect the next target is going to be up here at the 50-day moving average. Second target is you can pretty much draw a parallel line across the tops here. I wonder if that works. Trend. Pointer tools. Trend channel. We go right across the top here. Yeah, that's closer right there. Anyways, close enough to say that's where people are looking for a trend channel to set up. That's right. First day of school. All right. So the S&P 500, same scenario. It seems to be bottoming out here. Let's see. September 9th. Geez. I know down south, some of them started in mid-August, which I could never figure out. Why would you start school in mid-August in the South? Anyway, the S&P 500 also, okay. Also, coming up, that if they open this positive, they're going to be up above this downtrending channel. The NASDAQ, a little bit more compelling, and its gap up open today, where they opened it above yesterday's or Friday's open, went this way. Did a little, opened up here, traded positive, traded down, but closed right on the T line. Makes this very simple. If they open this positive tomorrow, look for them to come back up and test this level. That could be too. That might be. But I think just it hasn't been too many years since I know Texas started going back in mid-August. Okay, other things that are affecting the market: interest rates seem to have leveled out. Not really, the bond price is not going down anymore, kind of settling in here. Crude oil prices still in this uptrend. Slow, steady uptrend. Right now they couldn't get it back through the T-line. The left-right combo should be still heading up with a slow curve setup. The dollar is a good trade here. If this opens positive, they're breaking out well above the 50. And the inverse is the Japanese yen. Kind of a slow rollover. Can't get up above the T-line. Did kind of a left-right combo. This one should be heading back down. We could probably make this a little bit more. This one should be heading down. Let's see. Right now, the only thing I'm trading, we'll probably short the yen tomorrow. Live cattle. Notice how it failed up here at the 50. Can't get up above the T-line. Good possibility of coming back and testing this level. And the grains, soybeans, having a hard time getting up above this this level right here. They're selling this one off. But wheat, not but wheat, also wheat, notice what it did. It basically failed the 50. Notice the trend. The trend is down. Comes up, hits the resistance level, turns over. Now you've got that big left-right combo. They're starting to sell this off some more. I would make the next target right in here, which would make a good bearish trade. Corn, same scenario. Bearish harami right at the 50. You can see we're in a downtrend. Now you've got a left-right combo that failed at the 50, and it's trading down. So I would suspect there's your downside target. Another good move to the downside. And yes, there's the SK. There is ETFs on all of these. Let's see, what is it for? Moo is one of them. I think is. Whoops, that's the Continental Fund. But that looks pretty much like corn. Oh, cow. All right. So anyways, there's ETFs for all of these. And let's see, COYB. Yep, that's the same chart. Yeah, volume on these can get very low because not a lot of people trade them. If you're trading, the purpose of commodities is to see whether you're going to. A farmer has the security of if they're going to, if they think they can make a profit on their land by selling corn at whatever this is, $4.71 a bushel, they can sell it now and not have to worry about what price they're going to get at the end of the season. So that's what the whole purpose of commodity markets. The rest of it is just for speculators. All right, some good-looking charts out there right now. RPTP, to me, is still the classic fry pan bottom, strong price move. J-hook pattern, belt hold, bullish engulfing signal, back up above the T-line. If this breaks out of this level, it's going to the $16, $17 level very, very quickly. Facebook, Facebook, again, that J-hook type pattern, wave 1, wave 2, you're in wave 3, and all you can do is stay with this until you see a sell signal and a close below the T line. Sam, not so much hedgers that want to get paid up front. They want to know what their further investment is going to do based on what their results will be at the end of a season. For example, if you know as a farmer you can make money at $4.70 a bushel on corn, but you don't want to get to the end of the season and corn selling for $2.30 a bushel and you're losing thousands and thousands of dollars after. Same thing with coal or anything else. That if you're buying coal, or if you're an airline, what fuel prices are you going to pay today so that you're not getting whacked 6 months from now from higher costs? So it's just an effective way to manage the funds or manage your future expenses. Kicker signal on Zales, breaking out to the upside. Expect wave 1, wave 2, wave 3. Same scenario. Somebody was looking at MEI the other day. Gapped up. So the question is, what do we do when it gaps up this high? First of all, find out what it's going to do. And as we can see, they're probably going to move it back up into this trajectory and then do a 45-degree off of there. And PSP, that move up into the same trajectory, and there's your 45 degrees. So all you can do with these right now, and all you want to do with these right now, is just stay long as it doesn't close back below the T line. CLDX is another one that we've having in the portfolio. Kind of broke out. Now notice where it's trading, right back where it was acting as a resistance. Now it looks like it's acting as a support. Look for a J-hook pattern coming out of here. And Zillow has got a nice looking chart. There's the classic again. Fry pan bottom, strong price move, J-hook pattern. And notice Zillow closed well up above the recent highs, doing a doji type sandwich. Now another thing is, another little tidbit about a doji sandwich is, if this is the first part of the doji sandwich and there's the doji, this is supposed to be equivalent to this right here. When it isn't on the first day, there's always a good possibility the second day will move up to where the combination of this signal and the next day signal equates to this. And if it does, what's that telling us? It tells us there's no concerns here. They're moving further away from this, from the J-hook pattern breakout area. We recommended, this is what we're going to kind of go into a little bit before the end of the session today, is anticipation. Kind of anticipating what should be happening next with a high degree of probability. Strong price move, kind of a J-hook pullback, smack dab on the 50-day moving average, bullish harami, scoop type pattern, a doji. Made it very simple. If they opened a positive today, what would they be doing? They'd be doing a doji sandwich, confirming the scoop pattern, breaking out through this level, and telling us there's going to be more upside. So as far as a fast move, there could be a fairly fast move back up to this trajectory, and then it continues up from there on a 45 degree. We recommended EPL the other day. That's not the right one. There's your left-right combo, smack dab on the 50. When they break through a resistance level, they'll come back and see if it's going to act as support. Bullish engulfing, up above the T line, came down and consolidated on the T-line today. But came right back up. Anticipation, if this opens positive tomorrow, they're going to take this up the same magnitude, which means they're breaking out through this level, which means they're starting into the next wave. The doji is, that's the doji is the inside. The bread, it's not over here. Bread, the doji is the inside, and then the bread on the other side. VIPS pulled back today, but there's a left-right combo, close above the T-line, breakout from this downtrending channel, wave 1, wave 2, look for wave 3. So a lot of people say, oh, is this bad? Traded back like this? Nah. Usually it's profit-taking. I would bet you die to donuts. So open it positive, and they'll close it above today's. Let's see, had them backwards all this time. All right. Okay, let's see what else we got here. Again, for those of you that don't get the chance to get into the chat room, if you can just get in there just to see what people have been talking about, we get some very good-looking charts demonstrated in there. Oh, shazbutts. Just fine, howdy do. What keeps that thing? This is working out nicely. Where did we go here? There we go. All right, let's try this again. DYAX, there's your fry pan bottom. Notice what it did on Friday. Came back, consolidated right to the T-line, came back up again. Anytime you see that type of action and your stochastics aren't in the overbought condition, just kind of consider that consolidating. And if they come right back to the support level that we can see, now I say we can see because a whole lot of people don't have the T-line on their charts, but that's a natural support area. They can start bringing it back up. They're going to go higher because that means the T-line is not failing. And let's see. CMLS was another one that they've been bringing up in the chat room. This one's very easy. There's your kind of your J-hook pattern. Took it up like this, but notice where the stochastics are. They're not in your overbought condition. So this was a breakout with profit taking, and just, if nothing else, just use logic. If they took it up and brought it back down and did kind of profit taking, if they open it positive the next day, what does that pretty much tell you? Pretty much tells you the profit taking's over. They're probably going to take it back up again because they were buying in the first place. Somebody was selling it off, and they're still in there buying. So anytime you see this big shadow to the upside and you're not anywhere near the overbought area, look for a positive trade the next day. The bulls are going to be right back in there taking it back up again. And remember, these chart patterns are giving you a higher probability of being in the right place at the right time because this fry pan bottom buildup probably disregards what the general market is doing. More than likely, they can be taking this right back up. Even if they brought it up into this area, you still got a good 20% profit. Rah. S.CERS. Pulls back, inverted hammer, gravestone doji, which is your ultimate inverted hammer. Then bullish confirmation. This in itself is positive. Stochastics coming up. But even more so when you can see there's been a downtrending channel, but they broke through that. Not only did they break through the T-line, they broke through that downtrending channel. I would suspect your next move is another wave to the upside. What else we got here? CTCT. Fry pan bottom. Where are we right now? Right smack dab at the resistance level. Stochastics aren't anywhere near the overbought condition. Makes this very simple. If they open this positive and go through this level, where are we going? Probably right back up somewhere into this trend channel, and then see if it does a 45-degree off of there. So this is, again, we're going to get more into, I've got a whole batch of them to show how we anticipate, and that was kind of the reason getting into exam this morning. It's because we had a doji right here at the resistance level. If open positive, what would that be doing? Creating that doji sandwich and telling us that they were breaking out through this level and telling us they were still confirming kind of a scoop pattern moving away right off the 50-day moving average. So, okay, Susie, just this isn't anything. This is just kind of keep training your eye to look for the patterns and just analyze the logic. We know what a doji sandwich looks like. We know what a scoop pattern looks like. We know what a bullish Harami. All the things that we know, if you start adding them together, just gives you that much more probability of being in the right trade at the right time. So that was with fry pans. Just see, is this one going to work? There's that kind of little fry pan breaking out. There's your fry pan. Wave 1. Pull back. Wave 3 is going to be the same as wave 1. JKS. Kind of a little fry pan, but more like a curve here where notice they couldn't get it down through the T-line and they broke this level to the upside. We did Santa already. GDP, fry pan bottom, strong price move, pull back, kind of a little belt hold, close above the T-line, gap up doji, stochastics rolling or turning up. Makes this very simple. If this opens positive, this should be on everybody's list to say if it opens positive and starts moving and breaks out through this level, we're going to have another wave like this because we know what the classics is. A fry pan bottom, strong price move. Strong price move with a pullback is a J-hook. J-hook, we know, is going to be wave 1 and wave 3 are going to be equivalent. So this is nothing more than putting all the information that we know together and just to give us that advantage of being in the right place at the right time based upon what reoccurring patterns and signals have done for the last 400 years. Oh, no, not one of these hiccups. See if there's something else in here that will. Now, how can this be? Go all day long without a glitch. There we go. TD. Fry pan bottom, notice your doji gap up, hold back today, but if it starts trading positive, we're looking for this level right here for a breakout. FANG. Kind of a fry pan bottom. Notice what it did today, a gap up doji. If they open this positive, which way is it going to go? It's going to go positive. If it goes positive, what type of signal do we have in here? Got a little a flutter kicker. What do we know about a flutter kicker signal? It's just as strong as a kicker signal. It tells us we're going in this direction, which tells us this pattern is still in progress. All right, let's see, DYAX. DYAX, there's your fry pan bottom, there's your strong breakout. This one's probably going to be on the recommended list tomorrow. Another one, INO. The bigger the signal, there's your bullish engulfing signal. Now there's your slow curve. Where's your next target? Well, we can see there's a wee little teeny gap right here. But if that gets you moving in that direction, there's a good possibility they could get you up this level, which would be over a 50% move. HSOL. Observe the obvious. Strong move, pull back. Where are they starting to buy? Right smack dab on the 50-day moving average. Little kicker type signal today where they gapped it up above Friday's open and went this way. I would suspect your next target is here. Your next move has got the same magnitude as that move right there. And S.SB, I think, is one of the shippers. There's your slow curve. There's your breakout. There's your move. There's your J-hook pattern. This one can still be bought on positive trading. There's no telling. I don't think there's any telling of how far up this could move. It's just, notice the downtrending breakout on a slow curve breakout. Again, just use as much as you can to tell you there's a new dynamic in this stock. Slow curve, gap up, or strong price move through that resistance level. I know I have lists, Tammy, that I have already done up from each day. From if I find good stocks today, and I have my watch list 6, which is my dumping ground, or where I dump all the good-looking stocks into it. Then I start sorting through it. That means I still have watch list 6, watch list 5, watch list 4 as I'm sorting, that all have good charts in them. So, and if I see something that is setting up nicely for a chart pattern, I'll put it on the watch list so I can see what it's doing. Okay, TSL. TSL also broke out through this level. J-hook pattern. This one you continue to stay long until you see a sell signal. Bid SB. Okay, a couple on the short side. I think it was CHF or HCF, or maybe it wasn't that at all. It was HCP. This is, once again, where you observe the obvious. The obvious is you're in a downtrend. They couldn't get up through this downtrend. And today we did a bearish engulfing signal, left-right combo. Tells me that they aren't taking this up. If they open this lower, you've got this target and or this target to shoot for, which would still tell you that there's still more downside. I would anticipate that if this is your downtrending channel, this is your downtrending channel. They could take this all the way down to 30 or so. Oh, for crying out loud, what is this thing doing? I just got to get rid of this. All right. That was fun. Okay. And VTR, same scenario. Notice what this did in the downtrend. Came right back up to the resistance level, did a bearish engulfing signal. Now you can pretty much draw a line straight down through the tops, and today it did a bearish engulfing signal. This one, if you're shorting it, anticipate if this is your downtrending channel, that your downtrending channel should bring you down into this area, which has got to be somewhere down in probably the $50 area. So good 22% move to the downside. Can you do a quick ACAT transfer. Okay. Yeah, don't worry. I wish people could transfer money into my account. I can't buy enough cars. All right, so, whoops, that's not what we're going to do yet. We shorted gold, or our gold, anyways, our GLD the other day because of the bearish engulfing, and it can't seem to get back up above the T-line. This one, I would anticipate, has a good possibility of coming back down to the 50. And USU, this is the reason a few days ago, I hope whoops, that's not what we want. S.USU. The other day, we were kind of explaining that if this was the buy signal or potential buy signal, when it came back down below the T-line and couldn't get back up through it, stochastics are going flat. What was this basically telling us? Telling us that if we were below the T-line, our probabilities of something negative happening are much greater than something positive happening. So at some point, you just have to decide, all right, this isn't working. Maybe it's doing a fry pan bottom. I don't want to stay in it if it's going to stay lollygagging for the next 4 weeks. Close out the position. You can always put a buy stop up here. I'd rather give up profits knowing when I got in, it was heading in the right direction. On the other hand, I don't want to stay in something that has this type of probability to it. At this point, we don't know whether it's going up or going down. Why risk it? The reason we're using candlestick signals is we're trying to find situations where the probabilities tell us we're going up. Anytime those probabilities start diminishing off your I was reading about the antique car prices. Anytime you're in a situation where the probabilities aren't in your favor, close out the position. It's just money. Whether you have $30,000 in the position or $30,000 in cash, if the position isn't looking good, why stay in it? Get back to $30,000 in cash and find something that looks good to get back into. It could be testing support, but notice your stochastics are heading down. My feeling would be this coming back to probably test the 50-day moving average. Okay, so what we want to do is, if we know what our chart patterns look like, and what our signals look like, and where they should be occurring, we should be doing anticipations. This, to me, looks like a big rounding bottom. We're about the breakout level. We did a gap up today. This is DDD. We did a gap up today after kind of a bearish candle on Friday. This basically tells us if it opens positive, we're going to have a flutter kicker. If it opens positive and breaking out through this level, stochastic still coming up, this is an excellent point that if you haven't bought the stock and or calls on this, it opens positive, you know immediately to start filling the trades, getting or buying positions. I say immediately because we already analyzed that if it opens positive, we know what it's going to do after a doji. We know what type of signal it is forming, that flutter kicker, and we know what type of pattern is coming out of a J-hook, not a J-hook, a fry pan bottom, and that basically indicates that wave 1, wave 2, wave 3 should be the same as wave 1. This is where we want to start kicking in. I would rather be buying into strength than trying to bottom fish, because you don't know when that bottom fishing is going to be over. How about selling a put spread on the weekly? You could do that, but we're still 3 weeks away from, I guess, what is today? We are 3 weeks away from expiration. I would rather be buying in the direction of of what I think the trend is going to be, because there's a lot of time for it to fulfill. On the other hand, if we were only 1 week away, maybe selling the call spread or the put spread would be better. Could you please go over a flutter kicker one more time, especially the position of doji with right to the okay. Okay, a flutter kicker is, we know what a kicker signal is. Kicker signal is where they open it here and close it here. The next day they gap up at or above the previous day's open and they go the opposite direction. Well, the fact that they gapped it up told you a little bit of the story, that there's people anxious to get back in. But if they do a doji, we have another aspect that adds to our being in the right place at the right time. We know the simple rule of a doji is they're going to move it in the direction of how they open it after a doji. So if we know they're going to open it positive after a doji and go positive, we want to be buying immediately, number one, because we know which direction it's going. Number two, we know that if we took out this little doji, we basically have a kicker signal, or that the doji in between is what we make it, call it a flutter kicker. Which calls, I'm right now in the Septembers. We got 3 weeks, and I want to stay as close as possible, because when is this price movement going to occur? Right now. So I want to be buying the best leverage situations at this point. No, we are 1 week into September. Well, we just started. We still got the full week to the 6th. It doesn't expire until the 20th, so we got basically close to 3 weeks with respect to. Okay. Does the flutter kicker doji need to be at the top half? It should be above the open. Notice how this opened above the where this bearish kicker started. What's a kicker signal need to do? It needs to open above the previous day's open and go the opposite direction. Well, this has already done half of it. It's gapped up above the previous day's open, but did an indecisive trading day. We know which direction it should move based on how it opens tomorrow. Okay. Does it matter where the doji closes in the flutter kicker? No, just as long as it's right close there. I mean, it's got to be close enough to be a doji, and we've got to see that it definitely opened above the previous day's open. What's the best play? Got a couple of them. You can go, if we think it's going to break out, you might do a 55.60 call spread. I don't know what that would be. But if it's less than $2, hopefully it's closer to maybe $1.40. We know that this move right here could be up to 60 fairly easily because of this move over here, moving from essentially 32.50 to $50, 18 points. Move from here, it could not only get to 60, but as high as 70 in this next price move. Sam, we'll get to that, UNXL. Okay, some other ones that you can anticipate based upon how it opens. Notice what we've got here. Again, that fry pan bottom, the classic, and notice where the classic moved to. Right smack dab to the 50. Piercing signal, moving up. Today they did kind of the double doji, makes this very simple. If this opens positive tomorrow, they're probably moving positive. If they're moving positive, $1.05 for a GDT, that's a very good price. If let's do the math on that. GJ, would you also pull up the price for the 55 by itself? I had a target on DDD. Again, just probably the equivalent of wave one. Okay, $1.45. So that means the 60s are selling for 40 cents. Couple things happen on the math on that. Let me go back to DDD. First of all, your break even is lower. If you're buying the 55, selling the 60s for $1.05, that means your break even is at 56.05. If you buy the calls outright, I'm going to say hypothetically we move to the 60, even though this isn't a tremendously big difference in numbers. But if we paid $1.45, or if we bought let's do it the other way. If we bought the spreads for $1.05, our break even is 56.05. If it goes to 60, our 50 or 105 now goes to $5. Or essentially you made what's that? $3.95 on that trade, which comes out to somewhere around 280% profit. Whereas if you just bought the calls outright and it went to 60 by expiration date, your $1.45 has now gone to $5, which means you're closer to 220% profit. In this case, the number, because the 60s aren't trading all that big, meaning at 40 cents or so. But if the 60s were trading bigger, it would be the numbers would be bigger. Meaning, if you pay $1.45 for the 55s alone, and it goes to 60, it's gone to $5 for the $1.45 investment instead of going to $5 with a $1.05 investment. Your break even, instead of being 56.05, is now 56.45. Is the second factor, so you've got a little bit more money exposed. And third, you do have a little bit more money exposed. If this turns sour on you, you've got less money exposed in the spreads. The 60 strike price, okay. Now $67 is what I came up with. All right. It should have been 67.34. 67.34. So why do you buy a spread if you can just buy a call? Because Tammy, again, this number was, let's say, for example, that the 60s were, instead of trading for 40 cents, they were trading for 70 cents. And so now that meant your spread was, whatever that was, 30 cents less, or let's say 80 cents to make $5. Your break even would have been at 55.80. 80 cents going to $5 is like a 450% profit. Whereas you've bought the calls outright for $1.45, you've only made a 200% profit. Your break even was higher, and you had more money exposed. So most of the time, when you know what your upside target is, or potentially could be, doing a spread is going to make more sense just because of the risk factor, the amount of money you have exposed to it, and the break even. Now, what you do give up, though, is, let's say this stock does go to 67. Well, if you just bought the calls outright, your upside potential is going to be that much greater. Whereas if you bought the spreads, the maximum you're going to make is it going to $5. This would be more, the spread relevancy would be much more. Now, also, knowing what, going off on a different topic here real quick, knowing that if this opens positive tomorrow, what you could do is you buy the 55s for $1.45, or let's say by that time it'd be $1.50. You could sell the 60s for whatever, let's say 40 cents, so you've got $1.10 into the trade. Or on the other hand, if we know that if it opens positive, it could move positive, somewhat the same magnitude as these couple of days, that if you bought the 55s in the morning, 45, and it moves up, so in the afternoon your 60s are now at 80 cents, now you've only got whatever that turns out to be, 65 cents in the trade, and if it closes above 60, your 65 cents has now turned into $5. So that's what we call the staggered spread, where you're buying one in the morning with a high probability that if it moves higher, you're going to sell the other one at a much higher price, and your net is going to be much smaller. There might be all sorts of vertical spreads. You might, if it goes to there's lots of ways to work the spreads depending on knowing what your upside target is going to be. All right. So anyways, this is why you want to learn to kind of anticipate what is going to happen if this opens positive tomorrow. More than likely, you're going to have a doji or a flutter kicker signal, which means you're probably going to have a strong uptrend. So at least that way, you have a format to be trading off of instead of just hoping for a stock to move higher. SGMO. Oh, pshaw. No, boy. Okay, FDML. Okay. FDML. This will look more like a kicker signal. If it opens positive, we've had the bullish engulfing signal. Little stutter step. If it opens positive, what is it basically telling us? Telling us this little downtrending channel is not acting as a resistance. We got wave 1, wave 2, wave 3. Now, hopefully, we can get back to GMO. There's the kicker signal. Notice how it opened here and closed here. Then today they gapped it up, opened it above the previous day's open, and went the opposite direction. Now, where is this occurring? It's occurring in this flat trading area, but all of a sudden we've got a very strong signal. Stochastic still in the lower end of the range. This might be the time they're able to break it out because the strength of the kicker signal gives us a lot more force to the upside, which means if this is wave 1, this is wave 2. If they're breaking this out into wave 3 should be the same magnitude as this, which would be approximately 3 points to the upside. That would take you up into about the 1350 range. It takes me forever to make my mind up to just buy a stock / call, let alone a pure, to alone buy spreads. This is why you want to just use the math, and that we'll now that we're all back from vacation, we will be going into lesson mode again. We will do another call spread and put spread math setup training here probably within the next 10 days, since that seems to be a big interest to everybody. Doji and DDD. Should I put a stop at today's Doji low? Okay. Not necessarily. I mean, that would be a good place to stop, but then you just have to see what it does here at the T line. Right now, I would be holding this as long as it doesn't close below the T line. Notice we've had a few bad days. There's that little doji gap up. That should have been our breakout. It pulled back, but it didn't close below the T line. Should we have gotten out? No, because it didn't go below the T line, number one. And number two, we had a doji breakout. That told us there was some strength there. Now let's see if this is just profit taking still, and they start taking it back up. So I use the T line. Once the trend starts, I want to use the T line. That's right. Math class is at night. All right, let's zip through a few more of these. We did FMDL. We did that GDOT. Oh, pshaw. There we go. Okay, there's your kicker signal. Down day. Next day they gap it up and go this direction. Not only did they gap it up and go that direction, but they went through the T line. Not only did they go through the T line, they broke this downtrending channel. Notice the kicker signal here. Opened here, closed here. The next day they gapped it up and went this direction. What's to follow? More upside. What would be expected to follow here? More upside. Where? I'd kind of draw a line right up through the tops. That's where I would anticipate my next move to go to. So, again, this is anticipation. If this opens positive tomorrow, they're not resisting at this downward trend channel at all. Veil. Kicker type signal. Almost touched the 50. Now they've closed right here. If they open this positive, what's it basically telling us? That the kicker signal is still in progress, number one. Number two, this is not going to act as a resistance level, which makes our target what? Probably the 200-day moving average. We will do an emotions one of what we do if we've got a hang up. And again, this is not theoretical. This is from somebody that has had to fight through it for years to get through their own emotions to become hopefully a positive trader. So we'll do one of those too. You're going to be probably a lot more sitting at the computer when it's snowy, blowy, windy, yucko outside, learning things that I've learned through the years. There's your little doji sandwich. There's your confirmation of a fry pan bottom. If it breaks out through this level, anticipate that we're going to have a move like this. So again, we want to be able to look at the charts and see which ones have good upside potential. VNDA, I bought calls at the end of today's trading because notice where we finished up today. Kind of a cup and handle. They couldn't close this below the T line. You can pretty much draw a line right through the opens and closes. If this opens positive, we could get a good potential pop like this. So I bought calls with the idea that if this moves the same magnitude as this, you're going to make 300, 400, 500% in those calls. ATVI. There's a kicker type signal. If it opens positive, what's it telling us? That this downtrending channel isn't resisting and the kicker signal is in progress. We're in wave 3. Okay. All right. I've tried to read all this. And Sienna. Little kicker type signal breaking through this this downtrending channel. If this opens positive, I would suspect we're coming back up at least to test this level, a good 10% move. And for those that would like to have something for a little bit longer hold, which will have in place here any day now, that we will start setting up our long-term picks area. Notice what this one has done. Come up through the 50, came right smack dab on the 50, buy signals, hammer, doji, bullish engulfing signal, stutter step, piercing signal, confirmation. If this breaks through this level right here, we're in wave 3. Same magnitude as this would be about a 20-25% move, plus this stock pays a 10% dividend. And I think that's about all I've got for right now. So this market, we definitely want to see the pre-market futures opening positive tomorrow and taking this up. On the other hand, if they open this lower tomorrow, that means they've failed here at the T-line. They're not coming up out of the oversold area. Where's the next likely target? Down here, the 200. All right, do we have any general questions on candlesticks? Anything that I glossed over too quickly? All right, slightly negative on futures. Sam, right now the futures mean absolutely nothing. Remember, we're still, 12 hours away from what investor sentiment will be. And so right now it doesn't mean anything. Overbought is when your stochastics, which my stochastics are 1233, are above this 80 line. Oversold is when your stochastics are below 20. Stocks open up, gap up, and retrace. When do you get out? When it shows that the signal is has negated the previous day's bullish signal on the close. INVN formation. Yeah, just kind of a slow, steady eddy at this point. Doesn't necessarily need to be a formation. You did start the uptrend again on a little double bottom, left-right combo. But right now, as long as they can't close this below the T-line, you stay long. It opened higher and traded off today, but it didn't do anything to change the trajectory. Now, where would you buy this? I would buy this over this level, because if it comes up through there, they're breaking it out. That's when to be buying. When you have a trend channel and you have a signal, would you set a stop when it drops out of the channel or when it breaks the signal, or does it depend? Oh, let's see. Let me reread. When you have a trend channel and you have a signal. Well, when you have a trend channel, I forget which one we were looking at not too long ago. Where was it? Sienna? Something had a strong signal, a kicker signal to it. Well, for example, if you consider this a trend channel and you've got a kicker signal, that tells you, all right, I want to be buying this one on positive trading because it's a kicker signal. Number one. Number two, if it's a kicker signal and it goes positive, it's breaking this trend channel. That tells me it's going to the upside. There was one that we had looked at where it was kind of anyways, here's PRAN, P-R-A-N, fry pan bottom, strong price move. Where was the time to start taking profits? When you had a gap up doji in the overbought condition, that far away from the T-line, it better open positive and trade positive to stay in it. If it opens lower, you close out the position. If it trades back down through the previous day's low, you're definitely out of the position. Where's the target? Probably back here to the T-line. Is it going to stay or bounce off the T-line? In this case, it has. Don't know. It could come all the way back down here. Why take the risk? If we know that this is a high probability sell signal and it's probably going to come back here, we don't know if it's going to support and go back up, close it out. You can always buy it back. Sienna, okay, the earnings tomorrow. All right. All right, but something was happening here that they weren't afraid to be buying today. So a lot of people say, when you buy going into earnings, I come back to one very simple analysis. The candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. And if they're buying before earnings, that means somebody a lot smarter and a lot closer to the company than I am is buying. So that's the final decision. Remember, everybody can speculate, but the signals are telling you the final decisions of people that are actually trading of whether they're buying or selling. Left-right combo is a doji followed by a bullish engulfing signal. I can't remember which ones they were. We'll find them in here. Susie, we'll get to those in a minute. All right. Okay, let's go to specifics. Jim, do the double line. And Jim, in 4.8 seconds, do the second double line. We'll probably have as many as we can handle. All right, the second double line. There you go. Thank you. All right. That's ALNY. All you can do here is stay long as it stays above the T line. SRPT. Little kind of stutter step. This one's next target is up here at the 50. Stochastic's not in the overbought area yet. Everything's showing buy as long as it stays above the T line. S-Fun. Nice breakout. This is what you want to look for, is these slow curves. And notice where this closed. This is what you want to use for your anticipation. You've got a slow curve. You do have a signal in here, a bullish engulfing signal. A bullish engulfing signal. Kind of the same support level. Now you've closed right here. If it opens positive, coming out of this signal and pattern, what's it basically telling you? It's telling you they're not going to resist here. They're going up to the next level. Will you always get a big price move like this coming out of a breakout situation on a slow curve? Not always, but there's a huge percentage of the time when it does happen. I mean, if I had one trade set up to do as far as a pattern, it'd be the slow curve. When the slow curve comes back up to a resistance level and they break out, it's usually a big, hard, fast pop. There's a kicker signal. Opened here, closed here, opened at or above the previous day's open and went this direction. Went this direction, number one. Number two, broke through this resistance level. Number three, we know a kicker signal is usually going to have some good follow through. This had a good wave one. This one will continue on its wave three. Ruckus. Ruckus needs to open positive. You do have a little mini scoop pattern setting up. If you own it, it better open positive tomorrow. If it opens negative, you close out. Not because it's going to go down. Probably means it's just not going to go anywhere. PRA was a good short the other day. You want to stay short as long as it doesn't close up above the T line. Now, you did a long-legged doji, so it's going to be a good indication of which way they're going to take it based on how they open it tomorrow. I would still suspect with your long-legged doji gap down and the fact that they couldn't get above the T line, that you're still in a downtrend on this one. Let's see, we did TSL, GDX. GDX. This one, I wouldn't be long or short right now. I don't think. It's just not worth. Yeah, there's nothing there to tell me whether if they take it up, they're in a range. If they take it down, they're in this range. At this point, I'd be trading something else. NTAP. This one, an inverted hammer just above the T line. If it opens positive, you can be buying this one. And EXPD, this one you want to be buying. Now, this one is the anticipation of a trading range. Yeah, you've had a doji gap up. Stochastics coming up. That tells me there's still a lot of force here, probably enough to break it out through this level. And if they do, now you're into this area. So this is where, knowing that this is a very strong buy signal, doji gap up, your best friend, that tells you that probably that's where you're going to start seeing the next price move occur. Dish, Same scenario, a positive open here. Notice the little doji sandwich, bullish confirmation. If it breaks out through this level, still moving up higher. And CLX, whoops, that's crude. I thought that looked familiar. Clorox, that was a open and a close lower. You're still in a downtrend until you see a buy signal and a close above the T line. Clorox right now, you stay short until you see it close above the T line. OSUR, another one that if it opens positive, they're probably bringing it up to the 200. The Morningstar signal, stochastics curling up. And you've got this slow uptrending channel. Santa, this one you can be buying on positive trading tomorrow. And UNXL, all right, UNXL. All right, you saw, let's see, what did this do today? It opened at 1935 and it closed at 1915. So you had a left-right. This is your left-right. Let's make this bigger. You had a bearish engulfing signal after a doji. You're up here in the overbought condition, just barely. More than likely, what's going to happen here is it's using the moving averages. Came up through the T-line. Came back smack dab to the 50. Came back up. If it's in an uptrend, it's going to come down, touch the T-line, and do a J-hook, come up through the second time. So if this opens lower tomorrow, you close out the position. With the anticipation it could be coming back here, but we don't know whether it's going to come back down here and hit this trend channel. If it opens lower after a left-right combination, it's basically telling you that the 200 they started selling. CLDX, bearish or bullish Harami today. It needs to open positive and trade positive. If it does, here's wave 1. Wave 3 should take you up here to about the $25 area. Halo, stay long until you see a sell signal. Now this one did open higher and came back down and opened lower, so you've got kind of a belt hold, but you didn't come back down through the T line, or I'm sorry, the 3T line. So as long as you're above the 3T line, you're still trading positive. You don't want to see this start trading lower. At this point, I wouldn't want to see it close below this level. If they do, that means they're coming to the T line, but they've failed this level right here. Okay, how come we're still scrolling here? Exoma. Exoma is coming back to test the T-line. See if it does, bounces up off the T-line. It should not close below the T-line. And SGEN. Fry pan bottom. You can see the slow curve. As long as it stays above the T-line, you can hold on to it. If I was looking at this seriously, I'd be buying it, or looking to buy it up here at 44.40, knowing that it broke out through the fry pan bottom area. INCY. Whoops. S.INCY. Another one that can be bought on positive trading, especially after the doji, using the T-line as support. And VECO, a fry pan bottom, another one where you just stay long as it doesn't close below the T-line, but it's not looking real pretty right now. If this one opened lower, I'd probably close out the position. And APO, not anything yet. If you're short, you stay short until you see a buy signal and a close above the T line. If you're looking to go long, you need to see that close above the T line. Yelp, fry pan bottom. Another one that I'd rather look at it around 56.50, knowing that it's broken out through the fry pan bottom top. IQNT. As long as this stays above the T line, you stay with it. Definitely would like to see a positive open on this one. S.GLD. Did we do this one? This one, stay long as it stays above the T line. I wouldn't be trading it aggressively because of the magnitude, but yeah, you want to stay long on this one. And CME, Chicago Mercantile. Stay long. Just be very careful once it gets to the 50 to see what it does there. EGAN, another bullish engulfing, gap up through the resistance level. All you can do here is stay long. At this point, I'd have my stop below today's low. If it comes down through there, is it coming back to test the T line? Let's see. Let's see. I'm sorry. ESRX, Doji. If it opens positive, it's going to go positive, which also means this downtrending channel is not going to be holding anymore. This one is, you could be buying on positive trading tomorrow. S.YY. Inverted hammer type signal, slow curve. You can buy it on positive trading. Stochastic still coming up as long as you stay above the T line. Then you don't want to see it close back below the T line. And ALTR. This is not atypical, or is atypical? I don't even know what atypical means. This is common. Notice all the dojis. You started up, you had a down day, they took it right back up. That would be somewhat along the same line as VIPs. Buy signal, started up, had a down day. I would anticipate they're going to take this one right back up again. COG, this one, if it opens positive, you're coming out of this fry pan bottom breakout, trying to break out through this uptrending channel. And Under Armour, if it opens positive, notice a little kicker type signal, which is what we call a trend kicker. If it opens positive, it's breaking out through this little rounding bottom. You can be a buyer of this one. Las Vegas Sands, scoop type pattern. Buy this one on positive trading. REGN, Doji Gap Up. You can be buying this one on positive trading also, probably using today's candle, the halfway point of today's candle as your stop. And Visa. Visa, I've never liked to trade. It's trades relatively flat, but it is coming back up. I would suggest the first target would be coming back up to test the 50. Let's see, did we do Ruckus? Ruckus needs to open positive and trade positive. Beat has been holding up reasonably well. As long as it stays above the T line, you want to stay with it. But it needs to move because it's in a steady eddy. I mean, you'd probably be all right with it, but a steady eddy that might be getting near running out of steam. You don't want to let this one close back below the T line at all. OPK, 1 minute. 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 1 There's your fry pan bottom. There's your little J hook. I would buy this on positive trading. They'll be taking it up higher. And Bank of America, another one that's done in kind of a flutter kicker setup, I think. Yeah, if it opens positive and trades positive, you're going to have kind of a flutter kicker. If it breaks out through this level, notice where it pulled back to, smack dab to the 50-day moving average. You should have another price move the same magnitude as this, 3.25 points. That would take you up into the 1750 area. Lumber liquidators. This one is too soggy, too flat. It doesn't have. I wouldn't even hold on to this long term. It's an institutional trader. It just doesn't have any place to go. Not with any vigor, anyways. COG, stay long, as long as it stays above the T line. Again, not a real active one, but if it breaks out through this level, you've got wave 3 in progress. But there's better charts out there. Bud, another one that if it opens positive after a doji, after gapping up off the 50, they're breaking out through this level, breaking out through the T line, moving in the direction of how they opened it after a doji. GMCR, this one has to open positive to stay in it. If it opens lower and trades lower, it's telling you that it's not really going anywhere. Well, maybe I've got this too flat. Oh, it is going somewhere. I just wouldn't want to see it trade back below the T line. If it does, it just tells you it's in a very choppy stage. You probably make more money someplace else. Walgreens, left-right combo, doji, bullish engulfing signal. Now you've closed up above the T line and the 50. If it opens positive, breaking out through this channel, anytime you see that channel break out, there's usually a strong move, usually the same magnitude as the last strong move. And TPLM, S. TPLM. Nice chart, especially if it opens positive. Notice what it did today. The double doji, bullish confirmation. Use the T line as support. Stochastics coming up. If it opens positive, the 50 is not acting as a resistance. All right. No more tickers. All right, I'll do a few more since some of you might type slowly and couldn't beat Jim doing the double line. IBM, if it opens positive, is coming back up to test the 50, breaking out through this downtrending channel. AMZN, Amazon, kicker signal. This one opens positive. It's also breaking this downtrending channel. TBT, going to the top of the trend channel. Hammer, gap up through the T line. And LinkedIn, if it opens positive, it's breaking out into new territory. Now, was this the one that came out with a new offering? And BCRX, it needs to open positive and trade positive tomorrow to stay in it. All right, let's see. A couple quick questions on stocks that are lower priced. DYAX. The percentage move could be great, but you got to remember the lower price stocks will have the same patterns as a higher price stock, and I'm pretty sure the volume on this one is pretty good. So the percentage volatility is probably bigger in a lower price stock just because of the quicker price moves from a few pennies one way or the other. However, you still have to analyze what the chart's telling you. Not only would the volatility of a lower price stock be volatile, that was a clever deduction, but if it's doing an upside chart pattern, it means your upside is going to be that much better. INO, same scenario. You're buying based on the direction, not necessarily because of the price or the volatility. You're buying based on the direction, with the volatility being a benefit. But the volatility is going to work in your favor if the price pattern is working. And if you're normally buying $20,000 positions, and you come to something like this, you may only put in 6,000 or 8,000 just not to have a whole big position. Fastest double line in history. No. Do you look at stocks and make any decisions before hours? No. No, I'm making my decisions the night before. Now, the decision process is that I want to see that the stock that I'm anticipating buying, number one, I don't want to see the pre-market futures. If I'm ready to buy something tomorrow, and let's just take this chart for an example. Let's say the pre-market futures, and this is not a good example. Let's say I was ready to buy DDD. And I don't want to see the pre-market futures in the Dow down 120 points. That tells me everybody's selling. There's really no reason to jump in. I also, if the pre-market futures are showing me that they're already trading this up to 53.40, 53.50 bid and ask, that tells me they're opening a positive. I'm going to jump in right away because that's exactly the way I want to see it opening. Now, if it's opening down here, it's closed at 52.94. If it was opening at 52.80, that wouldn't tell me immediately they're selling off. That just told me that was the price they were opening it. I'm going to watch it to see if they're taking it down or taking it up. If they start taking it up, then I'll be jumping in. Okay, do you mean Harami on S-Fund? Did I? Harami. Oh, what did I say? Yeah, this is a bullish Harami. Yep, you're right. Bullish Harami here. Bullish engulfing. I probably said bullish engulfing. I hate when I do that. Do you need to scroll your chart over, or is it me? I don't know. I can do this. I can do this. I just usually try to have it out here a little bit just to... that's what I like, a big, nice pop, okay? Okay. A shared watch list, have 400 picks on it within the first hour. That's true. Except the nice thing that what you should be kind of recognizing is that there is a lot of good stocks being identified. So, but you also have to make sure that you're not jumping to conclusions. For example, the bullish trading today looked fine and dandy, but as I mentioned in the morning comments, it had to stay up positive or we were still in a doubtful market. What is the significance of the 3T line? We're going to be working on that Thursday. The 3T line helps us make faster decisions based upon it moving. When the prices move further away from the T line, we want to see what the 3T line is doing. And or if we're ready to buy, I would rather buy based on a bullish signal confirming and the 3T line confirming, coming back up through. All right, these are delinquent. Whoops, that's dot. Johnson & Johnson. Johnson & Johnson I never trade because it's too sluggish and slow, but it needs to get back up. If you're short, you stay short until you see a close above the T line. So we did our GEN. Long-legged doji. It's going to move in the direction of how they open this one tomorrow. Right now, stochastics are still heading down. S.CHK. Another one is in a slow uptrend. You can be buying this one on positive trading with the anticipation that it's going to come up to the top of the trend channel, which isn't huge, but at least it's moving in the right direction. NQ, that's the NASDAQ. S.NQ. NQ Mobile, you should stay short. Okay, there's some advice. If you're trading Visa, yeah, use MasterCard. Whoops. MasterCard's got better charts to it. Okay. All right. Okay, I guess we're, yeah, I'm tired out. Is it possible to do a new presentation on scanning techniques? Yeah, we'll do that. When it gets cold and we're not eating seafood by the lake, we're going to have a lot more nights where we'll be doing some trainings. All right, last one, Walmart, only because that's my favorite place to shop. Walmart, would you sell if you own it? Walmart gave you, let's see, if number one, I can't really say this. It might be doing a double bottom, but you've also got to remember Walmart is a big institutional trader at this time, and it may just be moving sideways. This is, unless it broke out through this level into a wave 3, I wouldn't want to own it. Right now, we saw that it closed back below the T-line, and there's just nothing exciting about Walmart. Walmart is an institutional trader where you put it away for 3 years and hope that it's gone up 7% a year. All right. Oh, that's right. Nobody asked about ONVO. That's because it's still stuck in the wedge, not going anywhere. AMAT, you stay short until you see a buy signal. Do you use fibs or something else for your targets? No, the targets usually are an obvious resistance level. Now, if I see a big price move, and I'm trying to think, oh, there was one that had been moving very well, and I can't remember which one it was. Something moved up very nicely. Well, for example, if I saw this and I saw them pull back and then I saw the close below the T-line, yeah, then you can come over and throw your Fibonacci number. But I don't use Fibonacci numbers to decide where it's going to. I use Fibonacci numbers to say, all right, we saw some buy signals at a certain level. Why was it bottoming there? Was there a trend channel? Was there a resistance level or a support level from way earlier? Was there a Fibonacci retracement? I use it to see why that buy signal was occurring, not the other way around where that is Pran. Yes, Pran is doing a J-hook. That one you probably can be looking at as a buy tomorrow on positive trading. What if the stock is at or near all-time highs? Bill, that doesn't mean it's not going to be at an all-time higher tomorrow. Got to remember, you're You're trading the price of the stock, not what it's done before. Netflix you continue to hold as long as it doesn't come back and do a close below the T line. How many people have you heard, or have you done it yourself? You bought something and it immediately goes down. What's your first inclination? Man, if this ever gets back up to where I bought it, I'm going to sell it. Well, where you bought it has nothing to do with what the price trend is doing. You might be selling into the next major move. Look at what the chart's doing, not what your emotions are doing. Now, on Walmart, if I had owned it, where would I have sold it? I wouldn't be worrying about whether I should be owning it or selling it down here. I would have closed it out up here. Now, that's not because I'm any smarter than anybody else. That's because so many times I ask myself, what should I do with this stock here? Should I own it or sell it? And I could go back and said, man, that was the time I should have sold it, is when I got the sell signal coming or telling me to get out of the position. Facebook, all you can do here is stay long as it stays above the T line. And notice what else it's doing. It's staying above the 3T line. Now, the 3T line and the T line are not what a whole heck of a lot of people have on their charts. But notice the natural movement of it. The 3T line is affecting this one, as well as the T line affects a lot of stocks. So there's something natural about the 3T line and the T line. Well, Bill, that's not nearly the problems when you have a mother that says, let's turn off the air conditioner and open the windows. And then you have a new wife that says, can we close the windows and turn on the air conditioner? That's a position you don't want to be in. That's right. I do that too. I have the air conditioner on and the windows open. Yep. Yep. I don't know whether there is a book out there, but I'm about ready to write one. Things they don't tell you about married life. Except I'm already on chapter 284 and I've not even scratched the surface. When I look at GMCR, I see it going short if it goes below today's low. That's GMCR. Not, yeah, if you're going to go short, it's on the basis that it's probably going to come back to the 50. That's right. That's true. So, all right, Brad. Yep. Okay. All right. Well, hopefully this market will show us pre-market futures opening positive tomorrow. Yeah, we haven't taken a honeymoon yet. Thank you, Brad. She's a good kid. And Halliburton. Halliburton, as you can see, is still in this slow, steady uptrend. Yeah, there's nothing wrong with that. All right. We'll call it a night. Thank you for showing up. We'll see everybody in the chat room tomorrow.